Hello, everyone. Today I'm here sitting with Rash from the team Rash, the agency, who are probably the one of the biggest, if not the biggest, agencies who sell properties in WA in Perth. And I myself, I am Raj Moturu, who help people in building and scaling their portfolios. So here we are today to talk about what the budget changes means to investors and how do we see the market going in WA. So welcome, Rash.
Thanks, Raj. Thanks for inviting me, and very pleased to be here. Again, Rash Dangel here from the agency, and we run Team Rash at the agency as well. So we sell north and south of the river, everywhere through town.
Absolutely.
But more importantly, we're here to share some information and our thoughts on the budget, the big budget.
Yes, absolutely. There's a lot of discussions, confusion among buyers and sellers, and a lot of people, first-home buyers as well. Is it the right time to get in, or what am I trying to do, and so on. So I thought there's nothing better than us sitting and talking about it from the vendor's side and the purchaser's side as well. And then let's bring in our personal perspective of what we are planning to do in the future as well with our properties.
Yeah, did you actually watch the budget?
Yes, I did.
Live when it was actually going down?
Yeah, this is probably the first time in the 20 to 23 years I've been in Australia where I actually watched it live.
Yeah.
I never put so much effort into listening to the budget every time before.
Yeah, same here. I've never watched it, so that was my first time. And it'd be fair to say a lot of people in Australia were watching it. It was probably televised to a lot of eyes on the screen at the time. And my thoughts on watching it was there was a lot of talk about the world out there and all that stuff, So it was scripted in a way that made you go, "Oh my God!" They put the fear of God in you over the war and the fuel prices, and then say, "Look here," and then straight to rob the rest of the country for whatever benefits they're already existing. So it was a very tactical, scripted thing, and I don't know what was your thoughts when you watched it?
Look, obviously, I was more putting my effort in to listen to what it means to property investors and properties in general in Australia. But as you said, most of the discussion was all around the war and how the fuel prices are going to be and so on. And I was actually, I'm part of quite a few different groups in one of those property investor groups, so I was there and I was actually, someone is like, "Look, I can't watch, I'm driving. Can someone put in what's going on?" And I typed in a message to say, "Look, they just started talking about war." And I'll be very interested to see how they combine or how they bring that into the property space as such. Frankly, maybe because I'm looking more into the property space, I probably expected a lot more clarity coming out of it.
Yeah.
But it just went so quick. They did not come back and discuss much in detail.
Yeah, and they really sold that $260 a year that everyday Australians will get for the year.
Yeah.
And and with rising costs of everything, I don't know how that's going to benefit $4. You can't even buy coffee for that, a week. So it was kind of overwhelming, to be honest. Going the way I was overwhelmed how they were trying to portray an underwhelming amount of money. So I don't know if that makes sense, but they built this $260 into something that's not very big, So,
absolutely. But I think it's also important. I'm not too much of a political person as such, but when they put all of that together and then they say it's few $1 billion is what we are putting in, so people might not understand what it actually means.
Yeah.
People might think like, "Oh my God, there is a big benefit coming for us over here." But coming originally from India and so on, we have seen when a political party sort of offers something for free, it always comes with something at the back end of it, maybe in a few years to come. And that's what it is. The more free things come in, it sort of scares me as in, what more are they going to cut back into the people lifestyles and so on as well.
Yeah, look, of course, the property side was again what we anticipated, to be honest. That negative gearing was going to get pulled after they promised they will never touch it. Yeah, I think they won the elections because they said...
Absolutely. I was listening to someone today, and what this person was saying is it's not just the way how it's all done in terms of how they said they will not touch the native gearing and the capital gains tax as well, and how they changed it in the last minute to say that they're going to change it because they changed their view. Apparently, that's what they put in. But a lot of people, for example, 4 years is a decent time in someone's life, especially a young family or someone who's planning towards a retirement. They might have planned something what they want to do in the next 4 years. All of a sudden, 1-2 years into the term where they're coming into, and then they change. Okay, from now today onwards, it's going to change. There's a lot of panic out there for people who are trying to put something in.
Yeah.
And so that's the thing. They should have probably done it a bit better again.
Yeah, a lot of our leased investment listings that had tenants in place that investors were looking at, that's really after Tuesday night. We had a big run up till Tuesday night.
Yeah.
And then bang, it's hard because what happens is a lot of confusion about negative gearing. So, I personally think, regardless of whether negative gearing is here or not, to me it's an accounting thing. Yeah, of course it's going to impact your cash flow every year, and in most cases it's only $5,000 to $7,000. Yeah, so if you're really looking to make money out of property as an investment vehicle, then you have to invest in capital growth. Yeah,
absolutely.
And the other thing I think a lot of people don't realize is the negative gearing part that used to get deducted in income every year gets kind of quarantined for when you sell the property. So you'll get the adjustment then. So don't be afraid to invest in property. The fundamentals have to stack up.
Absolutely.
And no one buys property for negative gearing. They buy for capital growth.
Actually, we would be surprised how many people are actually, or they have been investing in property purely for negative gearing because they think, look, I'm earning 200, 250, 300,000, whatever it is, especially the high income holders. They see the pain of paying so much on tax and they want to make as much as possible the tax back. And so that's one thought which I always kept telling people, especially our buyers, to say negative gearing is not a strategy. The strategy should be, how do I create wealth out of this? How much more wealth can I create? And what kind of life are we going to have in the future from this investments, what we are doing? So that's the reason why, like what you said, negative gearing, yes, it's not there as a name, but as I said, the losses get accumulated over a period of time. And when you sell it, you can claim that money back.
Yeah.
So I don't see that as a big issue until people get used to it. So people have to get used to it because until now everyone is like, look, I'm going to get 3, 4, 5, 10,000 out of my tax, but all of a sudden you're not getting that money back. So the people have to just get used to it. And I guess one advantage is they did this at the time of in a month's time, 6 weeks time, we'll get our tax returns, and probably people might stop to look at it from that point of view.
Yeah.
And concentrate on the fundamentals and buy the right property which gives them the growth.
Yeah, and for investors as well that were using negative gearing or are using it till next year, I think it's till the end of June next year that they get to use it if they purchased pre the announcement on Tuesday. If they've been using negative gearing and they do sell the property eventually, they also then get there's an adjustment in the end for the benefit you've taken along the years as well. So it goes both ways. You either you had the option to take the money earlier, which is not there now. But I guess in the long run, when you do sell your property, because property is a long play. Property isn't it's not a flipping thing. It's not a trading thing like a stock, So, and unfortunately, I think the growth in the West Australian market has made people really used to buying, selling, and I think that will just people will step back, like you said, and go, okay, how do I look at this as a big picture? Once the noise is out of the way, because the noise is. There's no negative gearing. The buyers will run away. No one will invest. In fact, it's really a good time to be buying right now. So
exactly,
that's the way I look at it. I know I'm looking at the moment and stuff myself and going, oh, that looks like good value.
Same here. I made an offer on a property last night. I mean, it hasn't been accepted yet, but let's see what it is.
Yeah.
I think So what you touched the main point over here, right? What people are forgetting is that flipping of properties, what they've done. Mind you, I'm not talking about the flip of renovating and flipping, but people have been buying a property in 6 months, 12 months time. They're selling because they can see that quick growth which happened in Perth. A lot of people are thinking that, just because we can't do that anymore, Perth is not a strong market as compared to what it used to be, right?
Yeah.
I understand there was this gap of 10, 12 years when we didn't have much growth in happen, and there's quite a few different things, but Perth at that time is different to Perth what is right now.
Yeah, much more matured market than
And
it
you know,
used
it's
to be.
we got rock solid fundamentals, unlike some of the older years where it was predominantly on mining only.
Yeah.
And if you look into the whole negative gearing concept, people think, oh, negative gearing is good because I'm saving on the tax, but a lot of people also come to Perth because of the positive gearing properties what are in there, right? So when you talk about that, I don't think there's any capital city which can come close to Perth in terms of the rents where we are.
Yeah.
So
The yield play is really good in Perth.
Absolutely.
The fundamentals are strong, and maybe let's touch on those as well. Perth, the current stock on market's for 4,500 properties. They call a balanced market anywhere from 11 to 12,000 properties.
Yep.
After COVID, we came out of our first lockdown. We were down to 8,500, 9,000 properties. We're half that stock.
Yep.
And last year, same time, there was a couple hundred more properties. So this time of the year, we find there's a lot of noise. Last year, it was a tariff war. There was tariff war and other things that were going on. And we saw a little bit more stock, up to 5,500 properties come on the market. We're now at 4.5. We still did 800 plus sales last week, which just shows that there's still volume in there. We might see a couple of weeks interruption, while people wrap their head around everything. But I think fundamentals are important. So you make a very good point. If Perth wasn't strong fundamentally, it wouldn't have this long sustainable growth. And one of the biggest issues we have is supply. I think we build about 10,000 less homes a year since we came out of our first lockdown in COVID in 2000. So that's a significant deficit of homes that we don't have and not going to magically appear.
And I mean, I just wanted to touch base on one of these things. I mean, the fact that you spoke about new houses not being built as per what we need and so on. Yes, the government has said, there is negative gearing on the new properties and so on, which is still okay because there's a fair bit of investors who think that home and land package is the right way to go, which I might not do it personally, and I would recommend my clients doing that as well, because the whole concept of this whole investment is based on demand versus supply. You touched on the supply factors. So if we believe getting into an established suburb, and if we had to buy a piece of land over here and help our buyers or anyone else build the property in there, I think that's probably going to hold a lot of value in there, rather than going to the outskirts of the city and buying something which is where there is 5,000 houses yet to be built. You become one of the 5,000. You probably don't see growth for like 10, 15 years at least. That's a mistake which a lot of fresh investors might start doing. And those are the people who usually complain and say that my money is stuck because I can't sell now, I can't get the growth, rents won't be really high. So I think that's very unique to Perth in the sense that you have these developments happening closer to the city, further away from the city. And again, further away from the city doesn't mean it's a bad suburb to invest in, because the fundamentals are really strong in some of those suburbs. I think that's something which you can touch base on, because you pretty much sell everywhere. So we can probably talk a couple of minutes on that kind of suburbs, which can give that growth.
I think anywhere that has good amenity, has some sort of economical drivers, some industrial sections there. Like if you go up north, a lot of those suburbs like Butler, Clarkson were not considered good places to buy before. But now families are looking and saying, oh, these have great amenity, it's close to the beach. Joondalups there, you don't need to go to the city. Joondalup's got every other, government office there as well. So I think that's what's changed with Perth. Perth's become so mature now. The population has grown. We can't paint it with the same brush we did 10 years ago. So suburbs within our state will have better fundamentals because of amenities, schools, transport network, better highways to jump on to get into other work places as well. So, I think the way we look at property now will change, and I feel these changes may impact the building industry as well. Every time the government intervenes, injects itself with some sort of stimulus to drive more construction, it only makes more building companies broke.
I know.
They are both directly proportionate to each other.
Absolutely.
We announce a federal grant.
Yeah.
Oh, more bills happen.
Yeah.
Another 10, 15 builders go broke the next week. I think it's irresponsible. And I'm not trying to have a rant here about the government, but I think it's so irresponsible whenever you try and resolve the supply issue by creating the supply issue.
Yeah. And
It's this weird way of like trying to solve the problem but continue to create more problems.
And in fact, it's like, we don't have to go too far behind to understand this same topic which you spoke about, where the builders do go broke and so on. It happened during COVID for a limited period. The WA builders and the whole building community haven't been able to cope up with it. It took like 2-3 years for people to build a small basic house as such. And now this is what the government has produced or came with this budget. The idea is to build more houses. The fact that this is across Australia, it's going to make even more harder with the resources and everything. Because end of the day, so where they buy the resources, it's only probably few companies which supply the building materials and all that.
Yeah.
It's not like we have abundance of this and, people are not wanting to build houses. They're just not there, So if
Yeah,
people
the
want to-
supply chain's already under high pressure tension at the moment.
Yeah.
The cost of fuels adjusted most of the material by 18 to 25% already. And this happened before the budget, yeah? So, and we still have insolvency issues in the building industry where companies are going bust, and a lot of them have learned the hard way and now are not taking business where there's a potential to lose money as well. You'll find a lot of builders will stick with their program. If they can't put a slab down within 3 months, they're not taking the job. They don't want to hold that on because the costs
will be higher.
Costs are hard to ascertain as a business.
And I was talking to a builder. This was before the budget came up as well. I was talking about what has changed since the time the COVID came in and how the builders are coping up for new businesses which might be coming. And one thing which was very interesting, what he said is, the insurance companies who actually insure these builders for the building, they are putting restrictions on how many they can do it as well. Any more than a certain build, they're not allowed to take until they clear up the stock in there. So with a situation like that, I just don't understand how even if more people want to just sign up for more home and land packages, I think there is going to be a bit of struggle to be able to get these builds on the time to be able to deliver and solve this supply issue which we are talking about.
One of the biggest shortages we have is land in Perth at the moment. Very hard to find land. Land got absorbed aggressively in the last 12 months. The pipeline of land is there, but slowly coming through. The land square meterage rates significantly jumped in the last 12 months. So by incentivizing investors still have to pay out of their teeth. High square meterage rate for the land, plus construction, plus holding costs, to then create supply to put tenants in. I don't know. I think that supply will come to the market, but whether it comes in the right areas, and then if you have vacant fringe suburb homes looking for tenants, and people don't want to rent some of these places for the price that the yield has to make sense as well. You go and spend $1 million on a home and land package now. Of course, you want the yield to be as best as possible.
Absolutely. Like I'll give you an example of so the suburb, for example, a lot of people are talking about, you spoke about Butler, Clarkson and so on. So I want to talk about, say, Pierre, Saristel, Southern River, these areas, right? The land selling over there are going over $1,500, $1,600, $1,700 per square meter, right? So someone I know bought a land for 450 square meter land for about $750,000 over there.
Wow.
And building a basic 4x2 is going to cost you at least $650,000, and then all the landscaping and put all those costs together, probably another $100,000 to $150,000, $800,000 for the complete build, and you're looking at $1.35 million for a 450 square meter house. And as you said, so they can't rent it for $750 a week. If they want to do that, they are probably pushing it to be, say, at least $900,000 a week, and this is only going to make it even worse as we go, purely because if once I think it'll take a few months to get there, but there might be new people who are signed up for their new builds, but they can't move into that for the next 2-3 years, so they have to rent somewhere. And so the rentals are going to be even more of a demand. And when, say for example, you and I, whom we have few properties in the past, so we are still okay to do negative gearing, for example, right? I don't see a reason why I should sell my property if I'm getting a good rent out of it. So the properties are never going to come in the market. And with the CGT which is in there are more. I mean, I'm more confused than ever to understand what my financial position is going to be if I sell the house. So I might as well not. I might as well sell not to sell at all.
Yeah, that's what's going to happen is the investors that have this sort of window to enjoy the negative gearing, where if they are doing that, will probably not come onto the market even if they're thinking about it. Going, oh, I need to wait now and think
Yeah.
what the impact is. And I was joking with someone this week, and I said, you know who should get on your Christmas list? And he's like, who? I said, your bloody accountant.
Absolutely.
Because your accountant's going to become your best friend now.
Yeah.
Because if you're involved in property heavily, and with all these changes, these accountants during COVID had to deal with all these changes. Now the budget's another change.
Yep.
And this budget with the CGT changes actually impacts Australia and impacts Australian businesses. How many businesses or baby boomers are on the cusp of selling their business for retirement, and now they have to relook at everything again and go, what do I do here? Or should I stay in business for another 2-3 years because I was planning to sell it for exit at a certain number, and now I can't? Will the market respond to the sale of my business? It is a huge change. It's probably the biggest wholesale change we've had in the tax system since the early 2000s.
Absolutely. I mean, like how we mentioned about accountants, which I completely agree, right? But I was talking to another gentleman who started a business last year, quit his full-time job in engineering to be able to start a business and so on. And I was talking to him just after the budget release. And now he goes like, he has put in 350,000 cash into starting the business. And now he's like, I don't know if I'll make this money ever, with the way the business is going. And, so obviously it's new, he's still learning the trade. But there are quite a few people like that who put a lot of money in, taking that extra equity out, mortgage increasing and so on. What's the impact of that? I know we're talking about something outside the property space, but this is going to be the questions coming forward for everyone, not just the property, but people, how they want to see their future life coming to be. So what do you think from your side as someone who has been running this huge team of agents and doing this and so on? So for example, if you have to plan your retirement in the next 3 years or so, what are the 1 or 2 different things which you will consider, or you will just say that, what, my retirement has gone by, probably 5 more years to go. Let's see what we are doing.
No, I think property is still the best vehicle to create wealth through. It's certainly tactile enough for people to look at and say, "Oh, that's what I will be doing." I know we do a lot in the property space ourselves personally as well. I don't think that's going to change. In fact, now we're talking to our team, our accountant, my financial planner, and saying, "Okay, how do we diversify some of our things? What we're doing." How do we go into a bit more personally, a bit more development, create some more stock, looking at opportunities around that? I don't think it's going to change anything. To be honest, I don't buy property under my own name anymore. I buy it under different structures. So, the next 12 months is going to be interesting. A lot of learning on how to adjust portfolios. You probably deal with that stuff with your clients as well. Where do we make these adjustments to then move forward? Because ultimately, this penalizes the people that have taken the risk to get some reward.
Absolutely.
And I think it's kind of irresponsible to make such a big change and also confusing. Indexation is such a confusing thing that they've brought it back again so they can confuse all of us, Look at this, a magic trick. Get confused, So I don't know. It is very irresponsible. But to answer your question, it doesn't change the fact that if you are in the property game and you love property, you will still love property and continue to do property.
Absolutely.
Because that's what we know. That's all we do, day in, day out.
Exactly. So, so you mentioned about something, right, which we are talking about the different structures and changing the kind of asset base, what we are buying and so on. I've said this to someone in the past, right, So with what we are doing, and I'll probably throw in something towards the end of this discussion, right? So one particular kind of asset class where there are a lot of owner-ocs and investors, especially investors in that space, they're not looking at negative gearing at all. They're not looking at capital growth. They are seeing what's the net yield, which is the commercial space where we're getting into. So this might be a great opportunity for some of our buyers, which we're already starting to have the discussion. If they have their decent portfolio, is maybe get into commercial spaces.
Yeah.
So, don't worry about what the government is going to change. Nothing is going to change for you because it's exactly the same way as it is. Many of these commercial properties are usually held by people for the retirement plans. They're never going to sell it. It's just a cash generating, cash cow kind of thing.
Yeah.
And the other part which you mentioned about is the developmental blocks. That's something which we are talking about. I know we had already developers where we helped them and so on, but all those investors who are buying these established homes just to rent out and forget about it kind of thing, maybe it's time for them to have a much smarter view about what they want to do. I know development may sound very
exciting
and
good
sexy
and
for some
colourful,
people,
but it's not. Yeah.
It comes with a lot of risks in there. People have to understand that. So I think
It's no
important
different to
put
the commercial buying a commercial property. There's risks involved in that.
Yeah, absolutely.
It's no difference to buying a residential property and putting a tenant in there. There's risks involved in that. Yeah. So
it's a business, right? When you're running a business, you will have risks, and our job, from your side, maybe when you're selling the house for someone, to tell them what the risks are for you. Once you sell, what can you do? And for us, is to buy the properties, about putting those risks up front and telling them, look, does the risk appetite fits into your criteria?
Yeah.
And that's what we look into.
Yeah, and one of the things for everyone to realize is that commercial property was not impacted through this budget.
Yeah.
It's only for residential property, and that is something that can get lost as well. People don't understand that commercial property was not. Secondly, people that were buying property through their superannuation, that's not been impacted as well. So, and there's a lot of people that have property through their superannuation. So, glad to see that they didn't try and mess it all up at once.
Not at once. That's the question. I guess the thing is how long before they start messing the other part up as well. So, but
yeah. I don't know. I'm pretty sure that Australia is not very happy with the budget, and from here, it'll be difficult for them to actually continue, I guess, to getting support. But I guess fundamentally, this is the question we should be asking. Does this changes help first home buyers getting into homes? Because that was what we were told.
Yep.
Oh, we're making these changes. So property is more accessible to first home buyers. What's your thoughts about that?
Look, so initially, yes, it might sound like a good plan because, so I can see few people who are coming in and saying that, look, I need to sell my house before 2027 June so I can make the best out of my capital gains out of it. But the smart investors are now slowly digesting this information, and I don't think they will be selling those properties, right? So very soon, as much as they think they're going to help these young Australians and first home buyers, I don't think they'll have enough capacity to be able to buy these houses, because the houses will start growing in prices very soon, following on the rents going to increase as well. So probably they might look into building new houses, but what you got to understand is someone might be working in the city, and imagine if they have to go to Yanchep to build a house, they're not going to be traveling from there to here all the time. And one thing which I don't understand, or I'm not very clear about the idea is, imagine if I'm a first home buyer, I'm working in the city, I go and build a house in Yanchep, 2 months, 3 months, 6 months living in there, I sort of feel like, look, it's too hard for me to come all the way from there. I'll probably rent back and leave this house for rental. So how does the negative gearing work at that time?
Yeah.
So is it considered as an established house and they can't get the benefit out of it? And if they want to sell, it might not be able to sell at the right price what they want.
Yeah.
So there's more to this than just helping the first home buyers.
Yeah. And we know that the government always makes right decisions when it comes to first home buyers, like the 5% scheme.
Absolutely.
Yeah. I think I read somewhere when they announced the 5% scheme, they said that it's only going to impact the property market by 0.6%.
0.6% per year. That's
Per
what they
year,
said
yeah.
across the country as well.
And then we had some suburbs jump up 100 grand just in 2 months,
Yeah.
as soon
Like-
as it was announced.
I can give you a very quick example, right? I bought a property for a buyer. We bought them 4 properties. This is the 5th one I think we're buying for them. We bought it for 755,000, and we bought it probably 4 weeks before they announced the first homeowners 5% with no LMI scheme. And by the time it got settled, it's in the first or second week of that scheme. The property right now, from last year October to what it is right now, is over $1 million. So it's like, so and the rents have gone up for him, and so he's ready to go get 2 other properties from the equity what he's got.
Yeah.
It's all, I mean, as much as they think that they're supporting the first home buyers, did it really help the first home buyers is the question.
No, it didn't. And I think what it did is it rushed everyone to go get a pre-approval at the 5% scheme and then to go and pay 100 grand over asking to secure a property. That's what it did. So it actually put less money in first home buyers' pockets.
Yeah. And I mean, as much as putting the 5% is okay, but people have to remember that they still have to pay the 95%.
95%.
And so
Principal
that
plus interest.
Yeah, and then that 100,000 growth, obviously chews up
Yeah.
pretty much, So just on that note, what did you think of the announcement what they made last time around, giving just few weeks notice to say from 1st of October 2025, 2025 is when they announced this thing, right? When every one of us, we are talking about it may be starting from 1st of January.
Again, they pulled a lever that quickly that, I knew that we were going to be busy in January.
Yeah.
I didn't think we were going to be busy in October
yeah.
like that, or just see that big flurry of buyers come through the door. It basically spiked. Again, just doing whatever they want, say one thing, do another. Look here, and then they do that. It's. I think it's. I think the thing you have to realize is you can't depend on the government to secure your future, your family's future. You could do something for your community, do something for for the people that you love. You can't depend on that. You have to depend on yourself and having good people around you. And these changes have happened, but we just mean we have to consult good people. You and I talk all the time. I know I've been talking to my accountant a lot recently. I've been talking to other accountants as well. We're all sitting around discussing the same thing. Where do we go from here? What have you seen? We're just sharing that information. That information is important because if you surround yourself with people that are looking for solutions, not actually stuck in this, it's all negative. There's always a way. And trust me, there's many ways now and many exciting opportunities in property as well. But just surround yourself with the right people because I think that's what's going to shift you. It starts with us. We need to shift our own thinking and not get paralyzed through analyzing this, analyzing that, and how the budget's going to affect this, that, the other. And property is the best way to actually move your life forward. It's the most basic need a human being needs. We have a housing crisis. We have lots of homeless people. If we don't have investors, developers, builders, real estate agents, mortgage brokers, buyers agents, trying to solve this problem together, we're never going to find a solution.
Exactly.
It starts with helping one person.
And the mindset changes everything, right? When we're having the right mindset, and when we're talking about, we need to change from where we are. Like, for example, we as investors, not just the professionals, right? And we are always looking into what's my next step to be able to provide this decent or strong financial flexibility around our lives for our kids and community and what you spoke about. If everyone starts looking at it that way, I think, I don't want to say so there are people who probably could have done a lot more in their life and financially, but then they always looked at the negative side of things to say everything is going up. Like how many people we have seen where they think that Perth has grown too far, it's all going to go back and so on. I think people have to have that right mindset to say, look, what, as you said, properties is the basic need for people, and there are many people who can't afford housing. So if we can provide a housing for them, which is an investment opportunity for the individual, but we are also helping the other person in the community. I think that can take the whole concept out of this thing instead of focusing on what changed in the budget.
Yeah, and this actually splits the community. Yeah, so it splits the people that are progressive, entrepreneurial,
Yep.
want to, make
Put
money,
access, yep.
to those that want to sit around and have it in a silver plate as well. So I see it online all the time. I get hit all the time online as well,
Yeah.
saying you're just a capitalist. You just want to increase the prices, and that's my job. I work for the seller. You work for the buyer,
Yep.
and I always tell everyone, if you're looking for a deal, go get a buyer's agent, because that's fundamentally your fiduciary rights towards your client, which is a buyer, buying to the seller to try and get the best possible price out of the market. And that I don't think people wrap their head around. There is opportunity in a rising market. There's opportunity in a flat market. There's opportunity in a market that's going down. You have to be able to have the right people around you to go grab opportunities.
Yep.
And that hasn't changed and will never change.
Yeah, and there'll be plenty of opportunities out there as well. And as I said, so again, having all those people around you is great. But again, having the mindset to take action on the discussions what we had, that's the biggest thing.
Yeah.
A lot of people get stuck over there thinking that, I had all these discussions, now going back to the drawing board and analyze for a few months and then things change again.
Analysis for paralysis. Yeah, we've got a lot of buyers who did that. And I tell this one story where a buyer came through, loved the home, property was for 620,000. Seller would have taken 610 for it, agreed to write an offer, send me all the details, wrote the offer, and goes home and speaks to his cousin. Cousin says, I wouldn't be buying, property market's going to crash. You should buy stocks.
Yeah.
Mind you, this guy is here with a wife and 2 kids.
Yep.
Can he live under a stock?
Yeah.
He can't.
He can't.
What's his first necessity now is to buy a house. And his cousin's advising him that, I invest in stocks and property market's going to crash.
Yep.
So I told him, put me on loudspeaker. And put me on loudspeaker. I said, sir, what stocks do you buy? He said, I buy this. I buy a lot of stocks. I said, but these guys aren't buying an investment property. They're buying a principal place of residence. It's for them to live in. Mm-hmm. And why you discourage them to buy the property? Property market's going to crash. And I said, if they're here in 6 months and the property market goes up another 50, 60,000, you're not going to pay 60,000 to them. Oh, no, they can stay in my house as long as they want. They're my family. So I said, okay, good luck to you guys. It's unfortunate I can't sell you the property today. But if you reconsider, come back to me. And I said, you should reconsider. You're getting a good deal here. Anyway, they were in the property market with me for 18 months.
Yep. They'll come and see every property which you're putting for sale.
And unfortunately, I felt so sad because when they were buying that for 600, low sixes, the property, they ended up spending mid to high 8s for the next property, 18 months later, still in and out of rentals, still not settled with the kids. That's why it's important, like you said, don't overanalyze. If you've got a plan, you want to do something, just do it.
If it's the right thing for you and if you feel so. And one thing which I tell every one of my clients is when you want to grow in your property investment space, don't talk to your friends and family. One, because, like what you said in this story, the cousin may or may not have that experience of what property can do for them. I'm not saying stock is a bad thing as such. You got to diversify, but you got to understand the fundamentals around what it is. Yes, everything will see a downturn and upturn and so on. But the thing is, where we are in Perth right now, the demand is so high. Even now, when people are talking about there are so many more properties and all these things, it's not that the demand is not there. People are just holding back to see what this budget is going to do for others, right? And it's just that absorption has sort of slowed down. That's all it is. A lot of these properties were there before as well, but maybe they're sold as off markets or directly from owners or whatever. They're coming in, but in few months' time, it will correct itself. With this stock levels which is in there, it's not just good enough.
And the stock level is not bad. 4,500 properties isn't bad. We're still selling, last week sold 830 odd or 40 odd properties, which that's sort of the number, 800 plus, 900 average. And Perth market has been doing that for 6 years now.
Every week by week, we
week
see those
in,
numbers.
week out. and that's not by chance.
Yeah.
That's a true demand story, isn't it? So, and April generally is quiet, December is quiet. We'll always find that stock either will rise up or and volume will definitely drop. And early parts of Jan is also the same. So, I think watch this space, like you said.
Yep.
Settle your mind. Focus on what's important. Buying important to you, go and do it. Selling important to you, go and do it. Forget about the noise.
Don't listen to the noise. Because as I said, sometimes, especially if it's your close friends and family who are giving you an advice on what to do about property, like advice is free, right? Anyone can throw in a number and an advice and so on. But the thing is, one thing what I tell these people is the so-called gurus who are posting on social media or, in comments to say, don't do this, whatever, or don't buy in Perth or don't buy in this city or whatever, because we buy across the country as well, right? But the same people, when they have to buy a property, they reach out to us. So I'm like, I saw you posting over there to say not to buy in this area or not to buy here or this kind of property, but you asked me the advice on what to do next. So if you are in the market to buy a property or thinking about buying a property, talk to your family or yourself first, and then come to the professionals, whoever it is, selling or buying or whatever. But don't just listen to people who haven't done it for themselves.
Yeah,
that's the biggest takeaway for someone who might be looking at this.
Yeah, no, 100%. And I think, look, there's the budget's confusing, so. Definitely, advice is you're going to go see your accountant soon to do your tax return.
Yeah.
Have a longer meeting set up about what your plan is from there. It's even more important now to have your real estate agent, your buyer's agent involved. Get a price check done by the end of this financial year in December, so that you're actually following what's going on in the market. Treat it. You'll have to treat it very closely just to understand what your goals are. If selling isn't your goal or buying isn't your goal and you've already done well with it, good luck to you.
Absolutely.
And the ones that are, I think, starting on their journey, I think education is important. Study and meet other people, get to understand what your goals are. If you're trying to get in the market, get a good broker, get into your first home. I think let's be pro property, because I feel a lot of this is not pro property, isn't it?
Yeah. Look, let's talk about property only, right? The strategies around property right now. I am actually going tomorrow to. I've been invited for a young Australian sort of space to talk about what they should do and why property could be a good avenue for them to tap on to learn more about it and work on their life. And these people are between 18 to 26, 27, so very young people, right? One thing which is a growing trend of the questions, what I'm seeing, and which is great, youngsters are thinking about it, is they all want to do rent vesting. They want to rent, they like to have a city lifestyle or somewhere near the beach or whatever, but they don't want to buy a property over there, it's too expensive or whatever. But they want to be able to build that portfolio somewhere else. While the government is talking about we want to help the first home buyers and so on, the younger generation, I don't think they heard the younger generation what they really want. A lot of the younger generation want to do rent vesting. People living in Sydney, they want to buy properties all around the country because they don't want to buy
be
a big house.
agile. A lot of them, when you're young, you also don't want to be committed to staying in one place. And you're right, a lot of them are rent vesting at the moment, but this prevents them from doing that now. And what we might end up having is all these charlatans hit home and land package space and build it here, build it there, go and build a portfolio in these fringe suburbs also Australia where there's no economical drivers. I think we have to be very careful as well.
So it's very important for these people, especially the starters who are getting into it, to understand more about what this means. Just buying one or two home and land packages isn't going to help them. Because they have to still go into those areas which will grow at, I'm not saying very aggressively, but at least in the average space, so they can take that equity out and use it somewhere else.
Let's talk about what they can look at. What sort of data can a young person trying to get in the investment space? What are those few things that will really show them some indication that it's an okay place to. One of them is the vacancy rate. Yes. What else should they look at?
The stock in the market, and whatever we're talking about, the vacancy rate, stock, and the future ones which we're going to discuss. It's not just about taking a snapshot. It's about understanding the trend of what's happening. The vacancy rates could be 0.9 right now, but for example, in the last 2 months it was 0 and it's going up, and there is more of the vacancy rate going up. At the same time, the stock is coming up more as well.
Yes.
You have to take all of that into account, not just one parameter as such.
Yeah.
And this varies suburb by suburb. Sometimes, in a big suburb like Baldavis, for example, where you got 30,000 houses, there are three kinds of Baldavis, what I talk about. You know,
Yeah.
so you have to pick and choose where you're getting into.
Yeah, and keep it simple. Like you said, if you have markets, then it gets even more complicated. You really need that local knowledge as well.
Yeah, talk to multiple selling agents. They tell you exactly what it is.
Yeah.
We are buying a property for someone in Keynes, and when we are looking at multiple properties and so on, right? So there is one particular agent whom I called in and said, "Mate, you know what? I'm looking at this or the other one, and I'm more focused on this because of my XYZ reasons and so on." And he said, "Spot on. You're really good," because he hasn't had that kind of conversation with anyone. No one called him to say it's not his listing. He just picked up the call and he's happy to talk about it. There is that local knowledge which you need to tap on as well.
Yeah.
As much as people talk about data, which is everything is based on data, but the local knowledge drives what's going to happen, because the data is always a lagging indicator in some cases, because you might not have enough sales in that area or whatever. Like, for example, if you sold a property or if you're going to sell a property tomorrow, by the time the finance comes through and by the time it settles, it's probably 6 to 8 weeks away.
Yeah.
And then the data source is
There's a bit
updated
of a
2-3
lag
months
in the
away. So,
data.
but you can tell them, look, this is what's happening this weekend. So it's important for people to do that. And same with us, we are in the market every day.
Yeah, and again, that population growth is there. Is there some sort of work going on nearby? Big industrial changes. Those things can all impact. Can impact the data as well.
Exactly. And
so you've got to be careful. But again, if you don't, nothing ventured, nothing gained. Yeah. At the end of the day, pick up the phone, have a conversation, be open to learning, and also if you make a mistake, it's not the end of the world.
Yeah. So if you make a mistake with all these different things, it's not just you. There's many people are probably making the same mistake.
Yeah.
But if you're not looking at the data and just going and buying a property and hoping that it will grow, that's not how you invest. One of the other important factors which I like to look at is the owner-occupied percentage. How many owner-occupiers are living in that area?
Of course, yeah.
Because so I don't want to get into an area which has got like 50%, 70% investors. I want to be in the other way of it. Where there are 80-70% of owner-occs in there.
Yeah, and we find that, and I always use that example for Bennett Springs.
Yeah.
Highly contested properties. As soon as an investment property comes up,
Yeah.
owner occupiers are rushing to take it off the market and not make it a rental.
Yeah.
So you'll find that these kind of areas, now they've got a new train station there, the film studio. There's all these, Malagas nearby, the highway. And these are things that you go, that's a really strong fundamental market.
Exactly.
So it's really good discussing about that. I've had a few questions as well regarding negative gearing. And one of them was very interesting because they asked me, I live in an old house. I want to make it an investment property. So I'm going to demolish my existing house and build a new house. Do I qualify for negative gearing? And the short answer is no, because you have not actually created new supply. Okay, so that was a very, very good question. I had someone...
So just an extension on that. Say, for example, yes, if you're demolishing the house and building one, it's okay. What if someone subdivides and makes 2-3 properties on that? Now they're increasing the supply. So is this considered as brand new houses?
Yes.
Yes, okay.
Yeah. So I guess the whole thing about this budget was to improve supply.
Yep.
So the net effect of that person in their own block with their old house, whether it's asbestos home, they've demolished it, built another house, they haven't actually created supply. So it doesn't qualify for the negative gearing. If they subdivide, build new housing, qualifies for... I had another question from a client that's bought 2 properties that were not... so he is bought half-constructed properties where the builder has gone bust. So he's bought these from me. He's gone and built them. And he said, look, they're most likely going to sell to an owner-occupier. But I just want to know, does an investor qualify for this home under the new negative gearing rules for new homes? And the answer is, I guess the test is very simple. Is it a new build? Yes. Has anyone ever lived in it? No. Even if he exchanged on it while it was half constructed, it's never been a residential property. Once it's finished and completed, he's able to then go and sell it in the market. And if an investor is looking to take advantage of the negative gearing and all that, and then they have an option with it. So very interesting. There's a lot of
exactly. There's a lot of in and out of it, because one of the other questions which I was asked about is this is a buyer in Gosnells. They bought two properties right next to each other, and what they were thinking is, because each of them is not subdividable in its own space, but when you combine both of them in one title, you can actually subdivide and make three out of it. So now the question is, okay, I break that, I demolish both houses, build three houses on it, and on paper, two has become three. So which one of those houses can I use it as negative gearing, or am I allowed to use on all three of them? So it's all these are, of course, tricky questions. This is where the accountants can become your best friends.
Yeah, exactly. It's interesting. I don't think, in my opinion, again, guys, it's not financial advice or tax advice. But in my opinion, only one may qualify. Yeah. So I think the net effect is that you're actually creating supply.
One property.
Yeah. So, or you might be all three because they're all brand new homes never lived in. But again, that same example that I told you, where they wanted to demolish and just do the one, it wouldn't pass the test. Yeah. So it's an interesting one.
Yeah. So when he asked me, I said, I don't think I can give you the right advice on this. Talk to your accountant. But even accountants, they're still trying to digest the information. It will probably take a week for them to know a bit more about it.
I had my accountant call me before this. I have another friend who's an accountant. Everyone's head's hurting. And I have another colleague who's an accountant as well. And he just said, I can't come out. I'm going to be underground now till early or mid-July. He said, Rash, forget about it. You're never going to see me because it's a bit. It is what it is. But I think let's encourage people to be pragmatic in their approach towards the changes and not panic. Take a deep breath and move forward.
Sure, absolutely. Just wanted to ask you a few questions, more like a friend and an investor, co-investor. We can do this and so on. Obviously now, with the way how the market is shifting and so on, what do you think of something? I mean, cash will be king very soon with the yield coming up and so on, right? So Victoria, for example, have got a lot of rooming houses. If for viewers who don't know what rooming house is, you can build a 5-bed 5-bath house or 9-bed 9-bath, which is very common or happening more commonly in Victoria. What do you think is going to happen in Perth, considering the yield is a big factor right now? So do you see them coming a lot more? I know there are some of those people who call them as HMOs and so on.
Yeah.
But what do you think is going to happen with that?
I think especially with these changes, people will shift towards building that build-to-rent style properties, so the HMO, multi-occupant homes. And it's basically a bunch of strangers living in a house together.
Absolutely.
And you get a per room rate depending on the amenities in the room. So if it's X number of square meters bigger, you've got a toilet, bathroom, or a small kitchenette, blah, 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 and those sort of things. Also, be sure these are a very different strategy. Needs to be managed accordingly. There's those tricky parts about managing people that don't know each other living in the house. There's certain fire regulation codes, certain insurances, management of these, the property management fees also higher. So there's a lot of those things that need to be factored in. So I would say good strategy, and you will see more of that kind of dual occupancy, HMO style accommodations getting built, hostel style. I mean, I was studying Curtin Uni. We were surrounded by that stuff, So Karawara, Bentley. So it's not a new thing. It's always been there, and predominantly it was always around universities. But now it's everywhere.
Because of the
housing
shortage of, so where, like for example, when I used to study back in Geelong, my house was the first house next to the uni, and anything more than 3 kilometers is too far away. So but now I've seen students living in Rockingham while they're studying in Curtin Uni because that's the closest or that's the only accommodation they could find.
Yeah.
But that's what's going to happen even more.
Yeah.
Just on that note of that rooming houses thing, what we spoke about, everything what you said is true with strangers living and so on. But a lot of the banks might not be willing to give loans for those kind of properties.
Yeah.
You might have to consider it as a commercial property. So in a case like that, having the right mortgage agent plays a big part.
Yeah.
So, but these are all the things which people might have to sit down and talk about it.
Yeah.
We are talking about it. We are talking about doing some of these things for our clients in Victoria and so on as well. But I see more and more of the discussions happening in here as well in Perth.
Yeah, exactly. And mortgage brokers as well, respect to them because there's a lot of changes I'm hoping the banks make to help investment loans because they have their quota. They have to sell investment product as well. So I think under company structures and bucket companies and all that, you'll start seeing a lot of maybe the majors move into that space a little bit more as well now.
Sure.
After the budget announcement, because at the end of the day, they've got to make their profits every year as well.
Yeah, so no matter what industry goes down and up, the banking industry is always pretty solid, so they have to make their money somewhere. So the next question for you is, as an investor, what are you working on? What are your goals for the next 1 year until 2027? Are you looking at selling any of your properties? What are you doing?
Pretty much holding my stuff for now. We might sell one. I might sell one for a little bit of a cash flow or move it into something else. Unless I have to move it into something else, I probably will be holding.
Sure.
Yeah. And I am looking at the moment for good quality stuff.
Yep.
And I've also moved away from a lot of, which I call not so blue chip holdings to more blue chip holdings.
Sure.
Because at the end of the day, it's about capital growth over long periods,
Sure.
At some point, I want to not try and sell so many properties a year. Get to retirement.
Just take it easy. And
take it a little bit easier or just keep growing, I guess, something for my children, yeah? So,
sure.
Yeah.
Exactly. So, same with us. We are in the market to buy one, if not two properties. But I don't think we'll be selling anything the way it is. I was thinking of selling one of my own, ex-owner of properties, but I think I'll leave it over there. It's rented pretty well. There is no need to panic and sell at the moment.
Yeah, and was it a positively geared property?
Which is positively geared, but it's negatively geared now because we took the equity out to buy the property where we are living in.
Yes.
But overall, it's still okay. It's renting for $1,000 a week. I can't ask for anything more than that. So
that, you see, that's a good example. It doesn't change the fact that you're not going to panic now and sell it.
No,
it's
not at all.
More to go and just pragmatically look and say, I don't actually need to do anything with it.
Because the tenants who are living in there, they are wanting to buy something or build something in that area. There's no stock available for the land. Forget about getting a land and building, and you're talking about 3, 4, 5 years before they can get to that stage. So
that's $52,000 that and the rents are going to go up again, guys. After this, I think if you take money out of investors, the next person on the balance sheet is the tenants. So
exactly.
I think that's the true impact with this budget. Is at the end of the day, the common person who's renting. I rented for many years, and I can tell you it hurts when that rent goes up.
Yeah.
And you have no option, but you just have to stay there.
It goes up pretty quick, right? It doesn't have to be like so. You might think that it's only $50 a week, but when you look into it from, so the weekly and the yearly point of view, it all adds up, it all adds up really quick before you know.
Yeah.
And one of the other things which we talk about is borderless investing, going and finding properties somewhere where you don't have to live there as such, but you can go and buy the properties and so on. I think that's going to become more of a thing back again with a lot of interstate investors coming back into Perth because we are seeing that growth come through in the rental because there is more of those dual occupancy homes as well right now. As an example, we just bought, this is the classic example, a single lady, quite young. So we bought her a property for $880,000 with a granny flat on it. Potential rent is going to be anywhere from 1150 to 1250. So it's like, so she's not panicking, so we are yet to settle on the property. we just did the pre-settlement inspection, and then this budget thing came through. So she's laughing already. She's like, you know what, whatever rates are, whatever it is, and now she's qualified for the negative gearing in case if she has to do that. So the equity grows up, she takes the equity out, puts the money somewhere else. She can continue to recycle that negative gearing thing. So yeah, I know that negative gearing is not there, but the dual occupancy homes will become a trend in the near future.
Yeah, and you'll see a lot more being constructed as well, provided they can get finance and all these other things, because it's not very straightforward. Yeah.
The councils have to look into it as well. I know some councils are quite easy, some councils are not as easy.
Yeah.
But I think when the push comes in, I think they'll probably be okay with that. Especially first-home buyers, they might be doing that as well. If they have enough borrowing, for example, if they can find a property with a piece of land, they can put a granny and probably rent it out to someone else, and then they might be able to get some extra cash into repaying those mortgages quickly.
Yeah.
So those are the things which buyers can think about, what more they can do.
And the other thing for investors, when you hold property for a while, it eventually is you don't have any negative gearing, goes neutrally geared or positively geared. So there's negative gearing unless you bought something very expensive or great, whatever from there. But I think over time, if you hold the property long enough, then it's most likely ends up close to neutrally geared as well.
Usually what they say is probably around 3 to 5 years at max before it turns from negatively geared to a positively geared property. And if we are lucky in that sense where the rents are pretty good even in this current market as well, it won't take that 5 years. Probably you get there within 2 years or 2.5 years. And especially with this, the way we are reading both of us, I think the rents are going to increase probably within the next 8 to 12 months. And in 1 year, 2 years time, you might be positively geared on the properties which you're buying.
Yeah, 100%.
So yeah.
Okay. Thank you.
Sounds good. Thank you. Thanks for your time.
Thank you for the invite as well. Thank you for your time and great discussion.
Absolutely.
Let's see what happens from here.
Yes, absolutely. And looking forward to more of this.
Thank you. Cheers.
Thank you.